and we can continue. Sure. So this session is primarily around the technical analysis. What is the goal here? The goal is trying to like fish, not eat the fish served by somebody else. You will be able to fish your own stock, try to like analyze it, look at the good side, bad side, and try to like come to a conclusion on your own and do a trade decision by yourself. And for that, the awesome vehicle that we have is called technical analysis. These days, a lot of stuff is happening through technical analysis and algo trading, and it is 100%. I wouldn't say 100%, like in 80 to 90% is all technical analysis. Obviously, sentiments and the market news always gets fed into that. Whether we like it or not, we have to learn this technical analysis, not just at a high level, but to a decent level. I won't say to the depth. Again, there is no end to the depth, but high level also will not work. You got to spend a little bit time to get to a decent stage on that. So let's try to like get a taste of what technical analysis is and what it can give us, and see how it can help us make a better decision. I'll quickly cover through a few slides. Let me lower this out, and I'll try to maximize this, and so that everybody can take a look. So charting tools. So technical analysis obviously would need a tool, and these are the top charting tools available out there. TradingView is the number one. TD Ameritrade is obviously another very smart and comprehensive tool, and other tools, so on and so forth. Yeah. Coming to the types of charts, what we can typically encounter in the technical analysis, they are the bar, candle trend, Heikin-Ashi, and all these. We'll take a quick look at the pictures, how they do look like right here. So the bar, candle trend, and Heikin-Ashi, what you see on the screen next to each other. Intentionally, I've taken the exact screenshot of Apple so that the candles this is a minute chart, so you can like see the differences. So on the bar, what you see is they're like thin lines. However, there is a nook on the left and right side, as you see. That way you can like see where is the highest concentration of the activity or the action that has happened. That's what you see over here. That's the reason why every line has a left side and the right side nook to it. So that's what is the specialty of the bar. It doesn't really occupy too much of a real estate on the screen, just one thin line, but at the same time gives a lot of valuable information by those nooks. Then if you see the candle, it is a little bit more, easy to read because obviously it is filling the whole thing with the color, red and green. Red is like going down and green is going up, kind of a thing. But it might lack a significant amount of information that the bar is holding, which is basically the nooks, kind of a thing, where exactly the price action is, kind of a thing. It has its own pros and cons. It's all depending on the user comfort. And then the candle trend. Candle trend takes the candle next to the next step, where it tries to see. Let's try to like see where I can exactly show the difference. I think here right here. No, I don't see. Yeah, I cannot see a big difference in this particular chart, but there will be a couple of candles, or like a candle here and there, where it could be a green in the candle trend or a red in the candle trend, and not on the candle chart, because it's obviously trying to like show you the trend. a little bit easy to reduce the noise. When I say you reduce the noise, that means that is it going up, is it going down, kind of thing. Instead of that, it tries to like give you a trend, which direction the things are. Heiken-Ashi is even more noise reducer, where you can like see from here where I'm showing the mouse all the way from here all the way to the bottom here, everything is in red. But if you kind of see the other charts here, there are some green candles as well. So what is happening? Heiken-Ashi has reduced the noise even more. Hey, let's not be disturbed by the small, teeny green candles because they are no value add. Anyway, the price action or the chart or the prices are going down. So why do I bother with the small green? Is what exactly is achieved by Heiken-Ashi. So it's a very awesome noise reducer or a trend chart. So that's the Heiken-Ashi. Obviously, it's from the Japanese guys. They have algorithm built into that and tries to like show, do I need to show, even though it is going up, do I need to show yes or no? They will decide because based on the algorithm and try to like show, okay, yeah, this is not what's showing here. What you see in this, it's so small up in the past previous candles by the candles I can like see it doesn't make any sense. So let me show it as red is what is happening here. So that's the thing. I use Heiken-Ashi a lot. My favorite two are bar charts and Heiken-Ashi. These are the two my favorite charts because they have a lot of information that are self-intuitive.
So Venkat, question. So
Mhm.
I understand that Heiken-Ashi it smooths out the smaller fluctuations so that the trend is very clear, right?
Yeah,
So whereas bar you have the even the minute fluctuations, right? So I think that is the main difference. So
right.
when do you use? You said you prefer bar and Heiken-Ashi. So when do
Yeah.
you use bar and when do you use Heiken-Ashi?
Actually, I have both of them pulled on my screen. Whenever I try to like deep dive on a particular stock, that
Oh,
means
okay.
that I am pulse checking 20, click, 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 I check and no, I don't like this. No, I don't like this. Okay, I kind of like this. Okay, let me park it. I kind of like, but after checking 20 quickly in a particular day, I try to narrow down on two or three. When I narrow down two or three, which I call myself deep dive, for that, I have a deep dive chart where it has both of these flavors in different windows. So I can like try to like see the
Okay.
deep detailed and also at the same time how can I share the both time.
Yeah, thank you. Now that makes sense.
Yeah, yeah. So once I show what that exactly means, other people can start appreciating when I say multiple views at the same time, consuming at the same second, how it can help improve the decision making. I can like show it in the live demo a little later. So yeah, these are like not popular at all. I don't see anybody really using much, even though they exist. I mean that way we can like kind of like skip. But yeah, they do exist. They are different styles of display. That's all. Let's get into the technical indicators quickly. Why indicators, right? Indicators are trying to like give you an idea other than the trend or the charts that we just saw in the past screen. The past screen might not tell you if the stock is oversold or overbought or can I enter, can I not enter, or those kind of decision making criteria. So two big criteria: is it overbought? That means that too many people bought it. So that means that there is a good chance that it might start resting. That means I always look at this price action. When I say throughout this meeting, I'll be using the word price action. Price action means that the stock either going up or down. That's what is called price action. So when a stock runs and runs and runs, just like you and me on a treadmill, we try to like take a breather. That's exactly what stock does as well. So when it is running too hard, it want to take a breather. Let's call that as an overbought situation. That's the time when I want to know when it is tired, when it is going to take a breather. That is what the overbought condition is. And how do I know if that guy is tired or not? Okay, for that exactly the reason why let's try to like take the help of the indicators. Just like whether we have a temperature in our body, we use thermometer, put it in the mouth or something. That's exactly the reason why. That's exactly the way we are trying to like use the indicators here, right? Oversold is the exact opposite, where if the guy is taking too much of a rest, that means that okay, he collected too much energy, so probably now he might start running. So that's called oversold kind of situation. So then, how do I know? Yeah, obviously we can try to like take a help of indicators kind of thing. So that's a layman way of defining the things, the overbought and oversold, which can quickly connect to us, right? Uh, so leading indicators. These are the few leading indicators that are pretty popular. There are a lot more indicators as well, but what they say is these are like more common that really can give some true information out. We can like see them in the next coming slides what they are respectively. And lagging indicators. So let me give a difference of the leading and lagging. Leading indicators kind of have a algorithm or the formula behind them to kind of, I won't say they are actually going to tell you the future, but they kind of almost tell you what might happen in the future. As an example, RSI, right? So if the guy is too tired, obviously he'll start standing up and running. Is an indication that you can expect. That is one of the things what you can see from a RSI. We'll see in the coming slides. So the leading indicators are, in a layman words, defined as it might give you a little bit more indication of what might happen in the next 5 minutes if it is a 5 minute chart, next 1 minute if it is a 1 minute chart, 1 hour if it is a 1 hour chart, whatever the chart may be, right? So that's called a leading indicator. Lagging indicators, almost all the indicators that we have in every trading platform out there, they're all falling into lagging indicators. If I look at detailedly, even the previous four or five are also lagging indicators. There's no indicator so far, or cannot be an indicator that can tell you a future. Just want to rule that out, so don't have too much expectation around the indicators. They're always going to be lagging. When I say lagging, they will show based on the price action. If the bar is going up or down, based on that only they can show their pattern, right? However, the previous indicators have a small edge on top of it. So that's the lagging indicator and leading indicator high level difference. We can take a deeper look at each of the indicators. RSI, instead of just reading through all this verbiage, let's get into the screen itself and see what it is. So the RSI, what you see on the top section is the actual graph or the price action of Apple on a particular day, which is January 15th in the morning, 9:29 a.m. Is the time when you see the whole thing. And then from 9:29 is what I just took a screenshot. So that way you can see the entire day. At the bottom, what you see is as a RSI indicator. This is one of the very popular indicator. What you see, and try to like keep looking up and at the bottom on the RSI indicator, when you kind of like eyeball up and down, is that RSI indicator, when it is all the way up, you don't need to, for a second, let's say we are closing our top chart for a second, covered it with a paper. We cannot see what the chart is for a second. Let's assume that way. And just looking at the indicator, what you can see here is that the top line is a 70 line and the bottom line is a 30 line, which is out of the box standard lines that the software Thinkorswim has. If the graph goes above 70, it starts to give you an indication that hey, it is overbought. That means the stock is tired running. Now it might, the word is it might start going down. That's the key here. So that is giving you a helpful hint that let me look for a good short. If you are trying to short the stock, let me look for a short entry to get in. Or if you're looking at exiting the stock because you're already in the stock, then you can like use this as a helpful indicator trying to like get out. For example, here if you see you saw this red coloring coming up on the RSI, and also you saw the high 130.22 kind of a thing, and then you realized that the price is started to fall, and also the RSI is trying to come down the top 70 RSA line. So then that means that you are able to make a valuable judging call, saying that okay, looks like I got my indication that the price is coming down or going to go down. It might go up to here. It might go up to here. It might go up to here. Nobody knows. Nobody knows, right? So, but at least you don't want to take a chance. You want to get out if you're already in the trade. If that is the situation, you can like try to like use this indicator and try to like get out. And maybe it might go only up to here and start going up. That's okay. Nobody knows what happens in the future, right? But at least you took at that point in time a call, educated call, saying that I wanted to get out, and I did get out. But if really it was going all the way down, then that means that you will pat yourself on the back, saying that yes, awesome, I did a good job. I did not lose the money that I made on the stock, right? So that way you are trying to like appreciate the RSI indicator. The same way vice versa applies when it goes all the way under the line 30 at the bottom. You see that blue waves coming up on the RSI. So that gives you an indication that the stock got tired and it might start running up. So here, if you kind of like see, it gave indication it might run up. But what happened here? It just went up and came back again. So it was that might happen as well. So here, if you bought the stock, that means that if you kind of like draw a line like this, if you bought the stock here, let's say if you bought the stock here, thinking that the RSI has given me the indication that it is tired, but what happened? It went even further down, and then that's the time when it truly got tired and start running. However, it did give you some level of indication. If you didn't had any of this, you never know if the stock got tired here, if it got tired here, it got tired here. No, you don't know. So obviously, the level of decision making capability is increasing by using this RSI. Any questions on this so far?
Venkat, I had a question. So
Yeah.
this is great. RSI is a great indicator for day trading, right? So during the tracking the movement minute by minute. But can RSI also be used for like a monthly chart and other charts?
Yeah, absolutely. Yeah, exactly. So all these indicators, what you see are 90, or I would say 98 or 99% across the time frames. That is the way they have developed these indicators, and there are custom indicators who can which can actually work only for the 2 minute time frame, which can only work for the 5 minute time frame kind of thing. When you and me start to pull up the coding and start writing, because we want to make that indicator more smarter only on the 2 minute time frame kind of a thing. But out of the box indicators, which are obviously like probably like 60, 70 or 80 of them, all those are actually pretty good for all the time frames. So if you are trying to like do this RSI as an example on the daily chart, it still is going to work.
Okay, thank you.
Yeah. So why did I spend more time on this RSI, trying to like go through that? Is that that's the precursor, so that the same concept would apply for the other indicators as well. So, but RSI is a worth indicator to spend and go through those concepts of correlating the stock to the indicator and try to like start to appreciate the indicator. And an indicator is an indicator. It is not a God or a Bible. It is going to give you indication. As an example, right here, you saw that it is going to go up, but what happened? It went down. See here, if you trusted this guy here, yeah, it did get tired and it went up, but what happened there? It went down even further. And what happens? We never know if it can go even further down. It might happen. right? So it did give some level of intelligence, but not the intelligence, right?
Yeah.
So
I think your
uh,
black cursor on a black background, it makes it difficult to see actually. The cursor is not.
oh, is it?
Yeah.
Um,
Okay, no, it
one
doesn't
minute.
matter, but yeah,
There's a white background around it, but still it's tough, is it? I can change the icon if you want.
yeah, make change the icon to a different color or something.
Yeah, um, let me mouse settings.
Yeah, make it a bit bigger or something.
I think I can change the just mouse.
Because it has got a black background, right? That is why.
Yeah, yeah, yeah.
Make it a neon colored cursor.
Yeah. That's what I just.
That's good.
I think it's too big. Okay. Yep, I got that. Thanks, Nati, for the feedback because on your own screen you will never know what's that. Yeah, this is better, right?
Yeah.
Okay, perfect. Okay, so let's go to the next indicator, parabolic indicator. So this is a self-explanatory, very self-explanatory. This is another indicator that is available in ThinkOrStream. If the dots are appearing on the bottom, that means that the stock is going to go up. If the dots are showing on the top, that means the stock is going to go down. So that's the way they have put together the code behind it. So there's nothing really to talk through. This is like self-explanatory. Anybody can use this. This is an area where you see that, which is a little bit of a gray area, that this particular indicator is not able to handle. This is a very good example here, that too much of up and down fluctuation. So it says that all the way up to here it's going up. Really, what happened? The stock is going down from here to here. But this is a very noisy area that not a lot of indicators can actually help you out. So that's a place where you might get caught. Even the smartest trader can get caught himself in this kind of an area. However, this indicator, as an example, is able to help you for the most of the areas. So that's the way you got to look at it. That yeah, am I getting help from this indicator for 90+% of the times? Yes, you are able to get it. But obviously, there is like a lot of fluctuation. People buying and selling, undecisive area, which is called a consolidation area. They call in the trading terminology. So none of the indicators, underline this, none of the indicators will help you, right?
Okay, can you
Uh,
repeat what you said about dotted line? I didn't follow.
so parabolic SAR is this indicator that we are looking at. And if the dots are below the graph, below the price action, that
Below the,
means that the price is going up. If the dots are on top, that means the price is going down. That's the way it is designed. So it's
but
a very
what
self-explanatory.
does the dotted line represent though? Is it
That means that it
is
started to go down. As an example, let's say, let me pull up a blank sheet right here and cover this up. So now, let's say we don't know what is going to happen in the future. That's the way the graph is, right? So, day in a life. Then we just saw. Let me close this. Let's say the dots are here. Oh, okay. Yeah, I know the dots are following upwards, and also they are under the price action. Okay, the price is going to go up. That's fine. I know that. That's fine. It's pretty straightforward. Oh, it's going up. I'm happy. I'm making more money. Ching, 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 kind of thing. Yeah, it's going up and made more money. Great. So now, oh, okay, the graph, the dot started to come down the other way around. That means that I need to be aware the stock is coming down. Okay, let me wait and see if it's just like a 2 bars, it might come down, or maybe it might come down more. Let me check and wait. If that is what your approach is, you can check and wait. Oh, no. That I think this is still too much. I think it's going down. Let me get out. Okay, you can get out. What happened? Okay, yeah, that was a good call. I think that's what that's a good explanation, right, Anare?
Yeah, no, I think I understand. So it's called the
Yeah,
parabolic SAR, is it? What is it?
yeah. Parabolic SAR. Yeah,
Okay, thanks.
yeah. So let's get into the other one. Stochastic, very powerful indicator. Very powerful. I would say you can bet on this one. Even then RSI or stochastic, or even then RSI or parabolic, you can just literally bet on this one, right? What you see at the bottom is stochastic fast. There are stochastic fast, stochastic slow, different variations of stochastic. Stochastic has a underlying basic formula and principle by itself, and on top of that, they have built. Think or Swim guys have built a little bit of a different small tiny variations called stochastic fast, stochastic slow, stochastic RSI, stochastic that, stochastic this, everything. But fundamentally, right, this is one strong indicator. What we are seeing is here stochastic fast that really can give you true direction. If things start to go up on above that 30 line, that means that yes, you can like trust that yeah, things will go up, kind of a thing. This is not that great. This is a catch, right? Out of experience, I'm telling. This is not that great on a 1 minute. This would be great on a 5 minute chart. This would be great on a 15-minute chart. When it comes to 1 hour or one day and all, probably not. So 5 minute and 15-minute charts, even 10 minute. My favorite are 5 and 10, by the way. A lot of people really like 15 minute and 1 hour because of my trading style, obviously. 5 minute and 15 minute, I mean 10 minute and 15 minute, these indicators, the way the wave is going up and down is very accurate. So you can really trust and make a ton of money actually if you're trying to like tell yourself that today I want to put up a hat of a day trader as an example. I want to try to like play a particular stock. Maybe I'll try to like play 5 stocks or 10 stocks for heck of it to learn things around. Pull up a chart, put this indicator for a 5 minute or a 10 minute. Look at the extreme most, either the top extreme most or the bottom extreme most. Stay in your trade. That means a buy and a sell difference is called a trade. Stay in the trade for that 15 to 20 minutes and see. Yes, I can tell you that you can make some money. That some money, it all depends on how much you're putting on the table. But yes, so why am I stressing that and saying that is that to mention you guys that this is a very powerful indicator. It is not a great indicator for the day trading, for the long term trading, for the daily charts. It's a great indicator for the day trading. For the 5 minutes and 15 minutes, this can really be a friend for you.
So Venkat, a quick question on that. So is it safe to say if you want to look for like long-term investing, you can do the 1 year and 1 day chart maybe?
Yeah, 1 year. 1 year, 1 day is good. 1 year, 1 day is good. 180 days. 1 year. 180 days and 1 day chart is another popular one. People go. And for the long-term trading, another better, the way I look at, which gives me personally more insight, best of the breed, is a 4 hour chart. So I pull up a 180 day and a 4 hour chart. That gives a slight kind of a balancing around and also the decent visibility. What I want to look at, if you're looking at a long term, take
And for a
my
short term, like if you're looking for a short term, then the 1 day 5 minute or?
yeah, 1 day 5 minute is 1 day 5 minute, 1 day 10 minute, both are good. Yeah. One day 5 minute, one day 10 minute, both are good actually. And if you are doing a stock that is under $10, under $20, then you have to stick to 1 minute chart. There is no other option. Even 1 minute chart, and there is another thing called tick chart, which even goes even further down, even below 1 minute. It depends on the instrument you are trying to trade. I'm not even touching the penny stocks topic at all. I'm even telling $5, $10, $20 kind of a stock if you're trying to like do that. And you call yourself, I would like to trade for today as a day trading. In that case, then absolutely 1 minute is a must. But to get a trend, you can use a 5 minute and a 10 minute. Again, all these statements hold good because we called ourselves on the underlying statement called, yes, I am doing a day trading today. I want to get in a particular stock and get out a particular stock. Take an example of recent GME or anything. Obviously, you cannot just sit on the stock. You will burn the whole house if you do that. So that kind of a stock is an ideal example. In that case, you have no other choice other than pulling up a 1 minute chart and a 5 minute chart. Right. So good question. So so that depends on the style that you wanted to or the information that you wanted to extract from the chart. So this is one important item that I wanted to stress on. This is the place where I think we stopped the previous call. Divergence. This is not the movie Divergence, but it's kind of like exactly the same concept. Divergence. Different people have different styles, kind of thing. So in what you see here is divergence. That means that here, this indicator, stochastic indicator, is saying that the stock is going to fall. That's what it is saying here. If you see at the bottom, what happened to the stock? It is pushing up. That is because of a lot of price action and too much of instant pumping that is happening. That happens. Who is the king? Always price action is the king. Who is the secondary or like a slave? Indicators are always like a slaves. They can give you some input, they can help you, they can guide you, they can like push your wheelchair from here to there or whatever. All that good stuff is great. Indicators should be used as a helping hand. Who is the king? Price action. What is the price action? The graph, how the price is moving along. You should be able to read this chart by itself, start to enjoy that, start to understand how it goes. At a 5 minute, end of the 5 minute, what might happen to the chart. Now it is 11:30 a.m. That means it is a half an hour mark. What might happen to the price? It is a 1 hour, 12 o'clock, or a 1 o'clock kind of a 1 hour interval kind of a thing. What might happen to the price? So you got to build that sense of knowledge. If you're a day trader, obviously, when I'm saying the 11 o'clock, 11:30, 12 o'clock, 1 o'clock kind of a thing, obviously then that means that you're a day trader. But if you're like a long term, then this divergence won't even apply for you. Divergence kind of a thing doesn't happen in a long term. Like that means you pulled up a day chart or like a 4 hour chart. Divergence is something that cannot because obviously the noise of the divergence, that means that instant pump and instant dump kind of a thing cannot happen at a long range. So this divergence is something you generally never ever see in a longer time frame. You'll always see these things in a daily chart. When I say always, let me take it back. Not always. Sometimes see in a daily chart, but most of the times, indicators, the way indicators represent the same exact way, the price action also happens. So here, if you see, there is a consolidation here. So that's the reason why here there is a consolidation also happening. Then here, if the indicator is going down, that means that the green, the red has crossed the green here on the indicator. That means that price is going down. The red is crossing the green. That means the price is going up. So 90% or 85% of the time, indicators will help you. in a day chart, and divergence happen in a day chart probably like once or twice at the max per day on a particular chart. But on a long-term chart, 4 hour, 1 day, and those kind of charts, you will never see a divergence, because there is no way the pump and dump can impact that long range of duration. Any questions on the divergence concept?
Hey, Venkat, I have a quick question. In this divergence, in this concept, when you see the charts going like that, do you ever consider volume of trade?
Yep, exactly. So here the pump, obviously the pump is coming from the volume. So that means that a lot of buying or a lot of selling is happening. In this case, a lot of buying is happening. So if the flood is coming, how strong the wall is, nothing will help. The flood nature, nobody can control the nature. The same way, when the volume is too high, that means the pump in this case is too high. That means the buying, the bulls are too strong and they're buying it. Nothing can stop them. So that's what exactly the price action is showing. However, because of the previous trend, these indicators try to like take the previous trend and try to like project the upfront. Obviously, it will also try to take the current price action, but not a lot. All these indicators always calculate what happened in the past, what happened in the past, what happened in the past, where I am. That's all the indicators. That's all they do. That's the way they are designed. So they try to like take a look. So in the past, if you see, oh, there's not much of an action. So that's the reason why here probably, or here it might have took a previous averaged out and started to say, yeah, now it's going to go down kind of thing. But here the volume came up, the bulls came up so solid, or the institutional buying maybe came up or something, or maybe a lot of calls maybe some unusual call volume came up. It just pumped up. Indicators can do nothing. They just go blindly, just close their eyes and say, yeah, I'm walking straight 2 feet and going right 2 feet and going left 2 feet. That's all it does. It cannot do much.
So what you're really saying is, when you display your chart in your Thinkorswim, you can have your indicators, but below that you should have the volume also, so that you are able to read that, because volume is not represented in this chart. Yeah. So you have to kind of compare it to the volume trends and then make your own judgment, right?
Correct. Volume is always helpful. That is an indicator by itself. Yes. So you can add that additional indicator as well. I'll once I get to the live demo, I'll start showing you guys how that volume will help. But sometimes volume helps only so much. Yes. It might not help. My personal style, I totally get rid of the volume. I don't look at the volume.
These situations, volume will be helpful.
Yeah, this situation, yes, volume definitely will help. Once you start getting comfortable on looking at the price action, volume would become like a waste of space on your chart. And you can like replace that area that the volume indicator uses for some other smarter or a custom indicator or something like that. But yes, 100% what you said is correct. Volume is what derives the price action.
Okay, thank you.
Yeah. So this is another indicator, Williams percentage R goes exactly similar lines with the stochastic family of indicators. This is also what they call can project the future kind of a thing, but none of the indicators can really project the future. But whatever the formulas they have, the algorithm behind it can probably give a little bit of an edge. That's all. I don't like this Williams percentage. My favorite is stochastic because that has proven time and again a lot more value, provided a lot more value. For Williams percentage R is another indicator. I just want to like throw it out there. Not much time to spend on this. It's the same exact concept. Everything is the same thing. Again, the same thing, divergence, what you're seeing in the Williams percentage R, the same thing, the here it's trying to like go up or the other way or vice versa, but the price is coming down, right? So you got to be cautious on this, the divergence concept. MACD, favorite, all-time favorite of everybody in the world. MACD is another indicator. This is the exact indicator. This is a lagging LAGGNG lagging indicator. Even though it is lagging, I just love this indicator. It gives a lot of value. It has two different things. One is the up and down waves. At the same time, there are the histograms as well. Both are included in this indicator. It has a ton of value. I cannot just speak less about it. It has a ton of value. It always helped me a lot, and it's a very self-explanatory kind of a thing. So when you see anything, the histogram on top of the line, what we call that as a zero line. When you see the graphs on top of that horizontal line, that means that it's in the uptrend. When you see the histogram below the line, that means in the downtrend. Within the downtrend, sometime you need to come back up, right? So then that is the reason why it had like the dark red and the maroon color. So that means that dark red is really it's going down. Then the maroon means that yeah, it went down. Now it started to recover back. So that's the kind of color coding what it has. You tend to use both of these in combination. That's the reason why they have built this. That means that this one indicator has both histogram and the waves, both of them together. They are part of the same indicator and they go hand in hand. You got to use both of them together. Otherwise, you cannot really get true benefit out of it. So if you kind of like see, try to like, let me pull my favorite blinding technology here. So if you see that from there, if you try to like see, oh, it started to cross. That's called MACD crossover. What is that crossover? Right here, it crossed. That's what is crossover. Crossover is a very solid indicator. Even before the crossover, the top one, oops. Okay, even before the crossover, the top one started to go down. That means that you need to start paying attention there. Then the crossover happened. That means it's a confirmation that yes, now it's going to go down. And also the histogram is also showing that yeah, it is going down. Yeah, I can see the whole thing. I'm not blind. I can like see so clearly. I might not know from the price action itself, but the indicator is telling me so many different ways. It's screaming at me. First of all, it here from the light green, it became a dark green. That means it's going down. On top of that, here the top neon line is started to wave. Is time to go down. And then on top of that, it is showing a crossover. What else I need, man? It is giving me so much of indication. Now let me be careful, kind of a thing. So what happened? It started to go down. So that way you can like use a multiple of those indicators within the same indicator to help yourself. So that's what the MACD indicator is. It's very powerful. I use it a lot, but I also use my own custom indicators, which I derived out of these MACD. That means that you derive best of the cultures, right? Let's say you take the best of the Indian culture, best of the American culture, and try to like make your own culture because we are in this country. The same exact way, you can always take best of this indicator, best of the other indicator, and if you are good at coding, you can always develop your own indicator, and you can come up with your own best of the breed. That's what we call, right? So, but yeah, this itself is a ton of help by itself. Then here.
Sorry, Venkat, can you go back to the previous slide?
Yeah.
So okay, just so MACD is moving average, convergence, divergence, correct? So
yeah.
Right. So now the two graphs, the two line graphs that they are moving averages, correct?
Moving averages, correct.
So are they over a different period, like 20 days, 50 days or something, or what is it?
One is at a 12, I think no. Let me. The 9. Okay, no. One is at 26 and one is at 9.
Okay.
And it goes back up to 12. It goes back and try to study the trend up to 12 bars.
12 what? 12
Bars. It goes back. Every indicator goes back and try to see what happened in the past. With the past, what happened? Can I project the future? Kind of with all the indicators, always go and check what happened in the past few bars. BARS bars. So 12 bars is the past few. 26 and 9 are the moving averages.
Okay. And what is the histogram represent?
The trend of the price action. That means that it is an uptrend or a downtrend.
Okay. And
trend of the price action.
If there is nothing, no line, no histogram, what does it mean? Or is it?
There cannot be a situation. There will be always a small. Depending on the visibility, how you can see that they will always. As an example, take this area, right? Take this area where there is a small action in the histogram. That area and this area, if you kind of see both of them in correlation, it's called a consolidation area, and exactly the same thing what you are seeing on the top. People are buying, people are selling, people are buying, people are selling. I don't know. Let me buy, let me sell, let me buy, let me sell.
Right. Demand and supply are same almost. Yeah.
Yeah, it's a consolidation kind of area. Yeah.
Okay.
Right. So yeah. So the same concept,
Venkata.
divergence. Yeah.
Yeah, sorry, I just had one question pertaining to how you actually build these charts in Thinkorswim. Like, I think earlier Bala mentioned volume. Like, how do you replace that with, like your stochastic index or?
Yeah, I'll go over the demo actually. I'll go over quickly. I'll cover this and try to spend 15 minutes around that time frame actually end to end in the screen. So that way you'll be able to see that. Yeah.
Mm-hmm.
This is a divergence concept. We don't need to drain that. Bollinger Bands is another good indicator. As the word says, bands, the top band, middle band, and the bottom band. There are always 3 bands in the Bollinger Bands. And it tries to wrap around the price action. And if the price basically tries to come down and touches the bottommost, or if the price touched on the topmost Bollinger Band or the line, you can certainly assume that the price will start coming down, because it's like a rubber band. When you stretch a rubber band, what will happen? It has to come back. Exactly the same way, when the price goes up, it has to come down. When the price goes up, it has to come down. That's exactly the way. There is also, if you can Google up rubber band man theory, there are a lot of articles. Just forget about all the indicators. Just by looking at the price action, you can know where the price is going to go. It's called rubber band man theory. A lot of people wrote a lot of books around that. But yeah, long story short, obviously the price will act as a rubber band. It just stretches, comes back, stretches, comes back, kind of a thing. And in that, we are trying to use this additional help called a Bollinger Band, where it has 3 bands in it. And when a price touches the topmost, you are utmost certain that it start to come down. It got tired. It got too much stretched, kind of a thing, right? So then it might bounce from the middle one. Then you can wait and see, oh, is it going to bounce, kind of thing, and keep your fingers on the sell button, kind of thing, or a buy button, depending on which side you are, short or long. And then if it is crossing that means it breaching that, then okay, then you don't need to hit that nuclear code button, which is called a sell or a buy. Then let it go. Okay, let me make more money. Okay, good. Now it touched here. And if it touched here, it might take the Bollinger. If the power of this the bears here, that obviously if it is going down, that's bears, right? if the power of the bears is high, it might even start pushing the rubber band also down. That means the price keeps going down and the rubber band also keeps going down. Then you are having your finger on the buy button or the sell button, whichever the side you are, till the side changes or till the graph is changing, right? So the long and short decisions can be made by looking at these bands and how far they're able to stretch, and you can use these lines as a helpful indicators. See here, let me take this as an example, right? Now forget about this. It went down. Now it is going up. Okay, great. I just bought somewhere here. It started to go up. I bought it here. Let's say I bought it here. Great. Started to make money. Okay, $5, $10, $15, and trying to like $15. I made money. Now I'm tensed. Okay, it is trying to like get to this hurdle. It's going to go up or go down, go up or go down. Okay, but my finger is on that sell button because I bought it. And my finger is the sell button. If I'm acting as a day trader, the same thing is true with the long term also. That means that Bollinger Bands are put on the day chart. Same concept as well. So you're trying to like see at the end of the day, oh, it touched it. Should I buy or sell? I'm a long term trader. Let me see tomorrow if it's going to cross that or not. So you'll try to like see tomorrow morning if you see that, oh, it touched it. Last night I did check it. It touched it and now it started to come down. Okay, that give me a good indication. Let me sell it. Before it comes all the way down, let me sell it, kind of thing, right? So that's the long-term trader guy doing it. Short-term trader, that means that you're in a day chart or a 5-minute chart. What is he doing? He's having his finger on the sell button because he bought it here, and he's trying to like look for this breach. Okay, it breached. Awesome. $20, $30, $50, $80, $100 I made. Now I'm careful. Here it touched the top, but that doesn't mean that it will start coming down. Keep your eyes open, start looking at it. $100, $115, $120. It came down maybe $120 to $115, so I lost $5 there. Yeah, okay, that's fine. It started to go up again. Okay, $130, $150, $180, $200 I made. $200, great. Now it started to come down. And also the Bollinger Band started to take a curve. So now, because of that risk taking, risk and rewards, right? And that's the whole point of the stocks. Here since I waited, I did not shake my hands. I took a $5 loss because I was at a $115, but it came down to $110 only. So I took a chance there. Because of the chance, it started to move up. Why did it take a chance? Because the Bollinger Band was still in the straight line. So it was a calculated risk. I took a risk. So it went up. Okay, now the Bollinger Band started to turn, and also I was here at a $200. Now $200 became $180. Man, I don't need to be too much greedy. Let me get out. I'll get out here if I want to get out, because this is also going down. This is also going down. Also, I saw $20 disappearing from my account, right? So $180 profit. Okay, thank you. Goodbye. That is a good day for me. It's a green day for me. So that's the way you're trying to like judge and use the Bollinger Bands to your benefit. I just wanted to run through a live example kind of a thing, taking a $100, $500 example, or like $100, 10 kind of thing. Does it help?
Yeah, it's good.
Yeah, okay. So that's the way you actually use that in a day in a life, right? And then the other way around, if you're trying to short, okay, let me repeat the whole process other way around. So I made money here, all the way here. I made $180. Great. Now I'm going to sell it. And now I'm going to short. That means I'm buying a short here. Okay. Keep repeating. Rinse, 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 rinse it, rinse it, rinse it. Okay. I made another $100 here. So I made a 180 here. I made 100, another 100 here. So going up also you can make money. Going down also you can make money, depending on the stock, right? If it is a shortable stock. That is what it is. Let's go into this is just a definition of Bollinger Band. And now what you're seeing is a combining the two indicators. What you see here is a Bollinger Band on the top. At the bottom, you see RSI. Now, if I combine them, what is happening? So here, it started to take up upward direction. Great. That means that I know it's going to go up. What is this guy saying? It bounced back from here. It started to go up. Okay, this and this. Two people are telling me, great, so I can take an admission in this college. The two people are saying that this is a good college. Great. I'll take a take a buy. That's what you're saying, right? So two people told you good things. You're trying to go up. Bollinger Band is saying that go up. Even though there's a shakiness here, I took a $5 chance. Even though there's a shakiness here, I took a $5 chance. Why? Because the Bollinger Band is straight still. Okay, great. Risk and reward. It started to go up. Now it started to shake me a lot. The reason why? Because it's overextended. That means it got too much tired, and also this is showing in red. It is above 70. So, and also Bollinger Band is showing. Okay, yeah, that's a lot of indication, man. That's too much. Like I need to get out now. So with these two basic indicators, right? You can like put and try to like play in a paper trading or a real trading, doesn't matter. I'm sure that you'll be able to make some money without any failure, just by these two as an example, if you try to like combine them, because too many things are telling you you are in good direction, you are in good direction, you are in good direction here. Now, too many things are at the same time telling you you started to go in the wrong direction here. So that's more than enough.
Yeah.
So that's the way you're trying to like take the help of the indicators.
So what do you do when the indicators are contradictory? One is indicating up and one is indicating down.
That's the reason why all these indicators are next to nothing. You have to start to learn understanding the price action. Price action is the God and the God and the God. That's it. You got to know how the price is trying to act. You got to look at the volume. Somebody just mentioned volume, right? Volume and the price action. These are the two basic fundamental survival skills. You have to have these two, and indicators are all additional help that you're taking. That's it. They're all toppings. You got to have the pizza. Topping is no good without the pizza.
You need the base.
You need the base. Yep. So that's what. But that's a good question, Nari. That good that you asked that question. You cannot get carried away by the indicators. You have to have the dough. You have to have the pizza. Then only the fancy toppings come in play. Otherwise, just useless.
Yeah.
Right.
Sounds good.
So now here I put three. Actually, 1 to 4 moving averages. Each color 9, 20, and 50 and 200 moving averages. Multiple moving averages overlaying on the same graph will tell a lot more detail. 9 will start to move sharp. Obviously, the K on one is the one that is moving too sharp because it's a 9. That means that it will go back and check the last 9 bars and try to like take a decision. That's exactly what that means. 20 means it'll, which is the green one. It is trying to like go check back what happened in the last 20 bars. What might happen in the next bar is what 20 is doing. So on and so forth, right? So that's what.
So Venkat, sorry. So this is 20 bars, not 20 day, right?
If it is a day chart, 20 days, 50 days, 200 days. If it is a minute chart, so on and so forth, depending on which chart you are on.
So if we are on the 1 day, 1 minute, so this means that this 20 indicates 20 bars, right?
Yeah, every bar in this case D. The word D is day, right?
Yes.
So that means that it is going to look at no, sorry, not the day. Here, right here, 1 day, 1 minute. I am in a 1 minute chart. It's a daily chart, but it's a 1 minute chart. That means that each bar is a 1 minute. That means a 9 means it's going to go back and check last 9 minutes. 20 minutes, it's going to go back and check last 20 minutes, because right here I am in a 1 minute chart. It's a daily 1 minute chart. But so vice versa, the same thing holds. If it is like a yearly 1 day a daily chart, then that means that it will go back and check 9 days, 20 days, 50 days, so on and so forth.
So if it's a 1 minute chart, which means 1 bar indicates 1 minute, right?
Correct. Yeah. So this is an overlaying of multiple indicators. It starts to give you if price is below this this line 200 moving average, that means it's really bad about that stock. That means that it's going to really sink. That's what just happened. If the price is below the 9 moving average, it might go down, it might go up. It for time being, for that few minutes, it is downtrend is what the 9 minute is going to tell. The same thing. So as you increase it, the more indication, right? If the price is below all of this, that means that it's way bad for the stock, right? So that's what it's trying to like give us an indication. If the price is below 1, 2, two charts here, that means it's as a day trader, if you want to look at it, that means it's a pretty strong down signal. That means if the price is below 9 and 20, which is what it is, the KR and the green, for a day chart, for a day and a 1 minute chart, it's a very, very, very bad signal that yes, it's going to go south. That's what
So
it's
that
happening.
means, so Venkat, that means if it's below 20, then it has a selling pressure, right? And it's probably
Yes,
not a good buy then, right?
correct.
So when
Exactly.
would be a good entry point from this? Would it be between 9 and 20?
Yeah, between 9 and 20 is 9 and 20 watch. Depend if you want to enter, you can enter between 9 and 20. But some people want to say only after crossing 20, I will enter. That's a little safer approach. Some people will say, no. Even if it cross 20, I want to have a crossover. Cross is different. Crossover is different. Here the price crossed. But crossover, that means that the guy can enter here because it's crossed 20. But some other person says, no, I will wait. I don't know what will happen. It might go down. So he waited. He wanted this confirmation called crossover, 9 and 20 crossover. Some people take this as a bullish, which is 100% bullish, no doubt. But what happened? Risk and reward, right? All this price action is lost. The guy left all this, depending on how aggressive you are. You entered here, great. Then how much you were able to make from here to here only. Then again started to go down. So it all depends on how much risk you want to take. But yes, between 9 and 20 is a safer zone. Above 20 is a safe zone, and crossover is the safest.
So here it crossed, once it blue and green crossed over, and then the 20 chart went up, right?
Yep.
So I guess the crossover is probably more
Safest.
safer, I guess, right? Yeah, safest, right?
The most. Yep. But exactly, you only made money in 3 bars. That's it. So risk and rewards. You want to take very little risk. You also got a very little reward. Risk and reward. This whole stock trading is all about risk and reward, right?
So the
that's what
9
it is.
and 20 crossover is a low risk, low reward.
Yes, exactly. Always you take low risk, you get low reward. You take high risk, you get if you go for the 9 to 5 job, you make $100,000. If you have your own business, you might make $1 million. But if you have a business, you might go bankrupt, and you cannot even show your face to your friends because you cannot even eat at home if it goes south. That means it's high risk. But a business can make you a millionaire right away. But if you want to play safe, you want to go for 100,000 like a paycheck to paycheck kind of a thing. Yeah, that's a very low risk. But you to get $1,000 increment, your manager will go to screw you like crazy. Oh man, you didn't do that. You didn't do this. So low risk, low reward.
Venkat, can you show me on the chart the crossover points?
The live chart, you mean?
Yeah, the moving average chart, the 9 days and 20 minutes and all.
Yeah. So I added 3 of the indicators right now. Right? If you see, I added 3 indicators of the same style. One I kept it at 9. The other I will change it at 20. The other I will change it at 50. So let's see the screen. 9, 20, and 50. So I added 3 averages. Apply. Okay. Okay, I did not change the colors. So you cannot make what is what. The second one, make it maybe a green. The last one, make it a red. Okay, now it makes sense. Let me go back and probably right here. That's a crossover, what you see, right?
It's only the two lines are intersecting, not all three, or any two can intersect and that is a crossover?
Yeah, exactly. Not you will never have here all the 3 lines are intersecting, which is very rare coincidence. It's
Yeah.
a miracle kind of a thing. But you never look for a 3-line coincidence at all. You mostly look for a 2-line intersection. And the top one, which is a 50 SMA, is like more of a confirmation or like a direction trend indicator kind of a thing. But your actionable actions are by 9 under 20. Here 920 intersected here the same way 920 intersected here the downwards. But here right there, right there. So these are already too late if you kind of see, right? This is a safe zone that it is going down. It is telling you it is going to go down. But let's say you looked at that going downtrend and you took a trade here and saying that it's going to go down. Yeah, probably you might have change that to this guy. Okay. Probably you might have made money from there to there. So probably you took a call looking at that, and you made money from there to there. But however, what you lost is from there to there. That is a big one. Always the safe decision making will give you less returns because you wanted to be safe, extra safe, right? You can like try to take a call here. Why? Because you're trying to like see that moving average is trying to like take a downtrend, plus the price action already is telling you it's going to take a dip, right? So that way you are able to make money from here to here, which is a better deal. Then this confirmed that, yeah, hey buddy, you are in the right direction. Good job, man. You took a decision right here where the arrow is showing. Good job. This is confirming you're in the right direction. Keep making money. Right? That is the way you got to use that. You cannot really wait all the way up to this thing. Otherwise, you will be able to make a very little money. Got it?
Mm-hmm.
Yeah.
But many times the crossover happens when one line is going up and another line is coming down.
Yes, always. No. Here, no, not always. That's completely wrong. So, K-on line is a 9 moving average. Green is a 20 moving average. Both in this case are going up. 9 moves faster than the lazy 20 guy. 9 moves faster. He can run. 9-year-old can run faster than a 20-year-old in this case. So when he's running faster, they intersected here. But both of them are running towards the same goal in this case. One is a 9-year-old. He can run fast. The other is a 20-year-old. He is not able to run that fast. That's all. But both of them are going from place A to place B. They intersect at a particular point. Right?
Yeah, Vish, even in the thing where crossover, where both are coming down, right? So both are in the same direction.
Yep.
Only the velocity or the thing that is the difference.
Yeah, the speed
Speed.
is the difference, right?
Speed is the difference.
So the same thing what we are seeing in this this basically gives you a advantage of overlaying multiple moving averages on the same chart. So how to use that is what we just kind of like in the live chart kind of looked at it, right? Trends. This is even more important than anything else. This is what I call as let me clear all the drawings and also let me take out all these as well. Apply. So what is this? I am blind, completely blind. I don't have any indicators, but I need to have the base, which is the pizza, then the toppings. So for the base pizza, what you are looking at is that you're trying to draw trend lines or trying to look at the trend. So let's say, watch it carefully here, right? So it touched here. So I'm trying to like touch over there and trying to like extend basically. I drew the line myself manually. Am I going to do this in the live chart on a day trading lively? Yes, absolutely. That's what you'll do. So what am I going to get out of this? So here I'm going to show you what I'm going to get out of this. So I'm touching the wicks, that means the endpoints. Am I touching every endpoint? No, I'm not touching. I'm trying to touch most of them and get a feel. So I will try to explain. Trend. So here it's trying to tell that it's in the uptrend. It's in a channel. It's in a channel between the A and the B channel. It's trying to go upwards, right? So in that case, if it touched the top, if it touched the top, I'm careful, it might come down. I'm just be cautious here that it might come down, but it did not. It kept moving. It did not touch. Okay, it might go up. It almost touched the bottom. That means that it's going to bounce up. It touched the bottom line. It might go up. So the bouncing up and down, up and down, up and down, up and down, bouncing is what is trying to like be observed. Because I'm observing that with my naked eye, I drew two lines. So like put a ladder, kind of a channel, what we call trend line channeling. Why is this important? Because I need to know, if I don't have any dam indicator, still I need to be able to fish my fish from the water, right? So how do I do that? Here, if the trend changed and it cut this channel right here and it's trying to go down, this is my place. That means it broke the trend. It's called a trend. It broke the trend right there. I don't have any indicator at all, but by looking at this price action, I drew a few lines. I called it myself a trend, called trend lines. They are also called channels. And then when it is touching the bottom, it's bouncing. It's touching the top, it's bouncing back. So it is nicely playing and honoring that area. And it's trying to like go up, right? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. That's what they call in the trading world, right? That means that it is going in the uptrend. But in this particular case, it started to come down, and what happened? It also breached this one. That is a clear indication that it broke the trend. T-R-E-N-D, trend. Trend is your friend. You got to know to read the trend. You have to build that capability inside you. Observe, observe, observe. Draw some lines, observe. It is a skill. Nobody can give you that skill. You have to build your own. You have to drive your own car. Nobody can give you that. You have to learn to drive your car, kind of thing, right? So that's exactly the same thing. Reading the price action and understanding the trend lines is something that you have to build. No other option, right? We cannot be lazy there. We cannot feel that, yeah, this indicator is going to do magic, that's going to do magic. Nothing of that sort, right? This trend reading and putting the trend channels and trying to like see where it is breaking. Then the bottom indicator might help you. Okay, it is going to confirm. That's okay. It's a confirmation. Then you're telling your friend, hey, Mr. John, I'm trying to buy a Nissan. I made a decision. What do you think about it? Do you think it's a good car or not? You're trying to take another second opinion. That's what it is from the indicators, right? But you did your homework already. That's if you don't do your homework and rely on your friend, that's it. God bless you, kind of thing, right? So that's exactly what this is about. So trend. Let's go back to the trend. What it is. So we talked about the trend. So here the trend. What kind of a? I showed you a parallel trend here, but here there's another trend. What is this trend? This is one of the simple moving averages. Price is coming, touching it, bouncing, coming and touching it, bouncing, coming and touching it. So what am I getting assured here? That, okay, if it comes here, I will still wait. Wait till it breaches that support line.
Yeah.
It's a resistance. It's a support line. This is a support line. It is acting as support. I saw here, since I saw this trend is my friend. Now I'm going to wait, make some money. It is coming down. I'm not going to shake. I'm not going to shake at all. Let me see. Obviously, I'm losing some money here. That's okay. I made some. Let me lose some. But I want to take a chance. It touched it here. Let me see. It's going to break or not break. It didn't break. Bounced it back again. So risk and reward, right? So I took a risk here. Risk because I saw the trend here. And this SMA line started to act as my support line. It's a trend. This is another kind of a trend that you are looking at. And you made money all the way here. Here it broke. And it came back. Because I had another SMA line as well drawn, now I'm checking. Let's say I did not sell it here. I want to take more chance. Because I made so much freaking money here, I wanted to give away some money here, which is like maybe 10%. I wanted to give away because I'm more greedy. I want to see if it is going to drop more. Maybe it might start bouncing for the second SMA line or not. I waited. Okay, my greediness worked. It started to go up. Okay, now I'm going to make more money. So it's all depending on how much risk you want to take. And using this approach called trend and the support. Trend lines, support lines, they're pretty much the same. Here you are seeing this as a support, this as a resistance. The top is a resistance, that means that it goes and bounces back.
Venkat, in your chart that you just showed, the red and the blue lines, were they always 9 and 20 days?
No, you can have your own. My lines I use as 13 and 21. I use 13 and 21. You can just type in anything. Here you can just say, the more you use and start getting comfortable, right? Here is of 9, I use 13. You can type whatever you want.
Okay. Thank you.
Shows up here. So my style is 9 and 13 and 21, right? It gives a little bit more play. That's what I've seen in my style and my way of taking the risk. I try to take 15% as my risk. In this case, as an example, it's trying to this is a risk. I'm giving away money. If I sold it here, I would have made more money. I'm giving away money. A lot of times it might just drop from here. Then I will say, okay, thank you so much. I lost 15% more. I would have made more. But that's my formula kind of a thing, right? So for that, my 13 and 21 helps me out for the 15%. So you come up with your own intervals and your style and the amount of risk that you're trying to take. But that's a very good question, though, which is actually going to go into your tuning your personality, right? You tune yourself, you tune your own personality. You go to a gym, next person is lifting 100 pounds dumbbells. If you touch them, your back might break. You don't want to touch them. You need to tune to your own thing. Slowly, you'll get there. kind of thing. You slowly tune. The amount of risk taking also grows as you get comfortable and get more experience. Then you start to tune. That means that 6 months back you had your indicators XYZ style. It will never ever be the same way after 6 months. You will adjust your indicators because your style, your way of reading your charts, your amount of risk taking entirely changed. You are now 100 pounds lifting dumbbell lifting person. You can like lift more, right? So they're exactly the same way.
So, Venkat, so the 13 and 21 you do on the 1 day, 1 minute one, right?
1 day, 1 minute. Yeah, 1 day, 1 minute.
So
21
looking at
especially works like a magic. 21 really works like a magic for me.
so now looking at the Apple run, right? Is there any indicator now, like for a buy, or what would be a strike price for a buy on the as per the indicators on Apple?
For the Apple as of today kind of a question you're
Yes,
saying?
yes.
No, I mean, let's come. I mean, that it all depends, right? Let's take the Apple. This is aftermarket. This is all the aftermarket kind of a thing happening. So we don't know. Tomorrow morning, once that starts showing up, and when you see a good price action like this going up, and then the curves also going up, and then let me throw a lot more indicators, and in the live demo, then I will show you. Okay, I think that should answer your question. Hold on to that. Let's go ahead. This is another price action, which is exactly what I already showed you. The channel support and resistance, which we kind of covered. Support meaning support is the bottom, resistance is the top. Right? So that's what we saw. So same thing. It's coming, bouncing, coming, bouncing, coming, bouncing. What is it saying? That's the support. That means that institutional traders obviously have some vested interest or something. There's a hidden agenda. They don't want the price to be falling below that because they had some calls or puts or expiry date is coming through. They might ding a lot of money. So that's why they feed their algos, and the algos will never let the price drop. It will start playing like that. Those are the reasons why that happens. But it doesn't matter what is the reason it happening. I can see it. I'm not blind. That is what is happening. Okay, whatever the reason, that is my support line. I can see it. Whatever the reason is a reason. For me, that is a support line. I can see it. I will also try to like play as a small timer. I can like use my judgment call and try to like play. I can like after seeing these three, the next one I can blindly try to like take a buy, so that I know that it won't fall any further. That doesn't mean that after here, did it fall anytime, Venkat, for you? Oh, many times it fell. If it falls, what will I do, Venkat? I will sell right there. I will sell right there. That is another tip and a trick that you need to know. I saw this pattern. I bought it here because it touched the support line. However, my bad luck, that particular point in time, it started to fall. Instantly, without even caring if it is going to go up from here or not. I don't care if it goes up or not. I will sell right there instantly. I don't care. I don't care. Because 95% mathematical probability is that it will go down from there, 100% or 90%. So that's all comes in the experience kind of a thing. So I'm just also giving you some tips, day in a life kind of a thing. What would I do? Even slightest drop, I will sell. Hey, you just bought it, man. You just bought it. Why the heck you want to sell it? I don't care. I will sell it right there. Having a small loss is better than having a big loss. Never get attached to the instrument. It is not your friend. It is not your wife. It is not your kid. Nothing. You get in. You thought it will go in some direction. It is not. You get out. You have your 10%, you have your 15%, you have your 4%, depending on risk taking, you get out if it is going the opposite direction. Yeah. So so these are other examples of support lines, right? What you see here. in a long-term range, what you see, oh, okay, it bounced back, bounced back, you can like use that as a support line. Resistance here, the other way around. It's going and coming down, going back, going up and coming down, going up and coming, going up. Come on, man. There's a big wall. It's just like a China wall over there. A lot of people are shooting. People, if they go, they're chopping the heads off over there. That's what is called resistance, right? So if you see that, if the price is going over there, then you can like take a short entry, and then that is what this is what is called sometimes double top, triple top. That means if you see 2, it's a double top. If you see 3, it's a triple top. Triple top is from a mathematical probability 90+% probability that it will drop from there. Double top is a probability 50+%, 60+% kind of a probability, or even 70+% probability it will drop. Your finger is on the sell or a buy button wherever it is, right? Depending on the scenario. If it's a double top, with a triple top, I will definitely take a shot right here. Right? So because that's the trend. What you're seeing at the triple top is very famous for a reversal, and you take a trend. You take a call. Right? The same thing, resistance breakouts. What you see here is a breakout happening here. Here there's a breakout from here, upper breakout happening. So it's just like the breakouts. You need to watch out for that again. Signals. So this is just like example. You have on the internet tons and tons and tons of these patterns for the candle charts. So rising wedge, that means that it's trying to like play within that channel. It's trying to rise. That means that you need to take a entry here. That means if it is coming down, you try to take an entry. If it is going, if it is going down, you're trying. This is a short entry, by the way these guys are. In this picture, this is a short entry. How do I know short entry? They're entering here and they're exiting here. That means it's a short entry. But he took a shot here. However, it went against him. It went against him. He's trying to like sell right away. That means that this is a loss he's trying to like take, which is probably like his 10% or his 15%. That's his risk-taking capacity. And he's trying to exit here. Most of the successful day traders, they will never wait. Oh, it's going down. Let me make more money. Let me make more money. Let me make more money. Nobody does that. They try to immediately sell. They get a certain profit depending on their style. My 20% came up. I will sell. No matter what, I will sell. Those are the guys who are successful traders. Don't ever be greedy. Oh, it is still going down, still going down. It'll just bounce and the money that you made is all lost. Or at least this target place, if you're taking a short entry, take off some of the share. That means that you short 100 shares here, take off 50 here. That means that you book the profit. And then if it is going down, that's great. If it is not, then try to sell the rest of the 50. That means that you at least were able to cash as much as you can, kind of a thing, right? So so that's the way you can use it. Here, head and shoulders. What they say, this is a shoulder, this is a shoulder, and this is a head. When they have a head and shoulder, then it is up for like a good trend reversal, either up or down. So here it is a short. Generally, head and shoulders is a reversal pattern. So there's a entered here. It's a short entry. When I say entry, it's a short entry, not a long entry. It's a short entry. He bought it here. So that means he entered as a short and he sold it here. Then the stop loss is right here. So you will see like this a lot of these patterns. You just need to try to like memorize so few of the popular ones. You cannot obviously memorize everything, but why I am touching upon these is to know fishing. This is not about indicator. This is about price action and trying to like understand the patterns, how the price is moving, and how do I know where the price will go? How can I make a call? How can I make educated decision? Even without any damn indicator, you can still do it. That's what this particular slide and this particular slide is telling you, and try to like give you a hint that yes, fundamentally you need to know to study the chart. You need to know to study the price action. and the price action can be studied by these kind of patterns. So that's what is the introduction. So more of the price patterns is what it is. I just gave you some more kind of thing. So there are like a lot more of these on the internet. Yeah, then I just saying do your due diligence. That means that reading and more reading. That's what you need to do. That's a must. I mean, the more you read, I've been reading for many years. Still, I feel like I'm nowhere. I just started to climb the mountain. I'm still at the foot of the mountain, kind of a thing. So it's that vast, right? That vast. I put up a few good books that are most popular. I did read myself a few of them. They're really good. And somebody might say, "Hey, man, this is like a tech world. Who the hell is going to read the book?" But that's what exactly I felt as well. 100%. I want to be admitting my sin. That's what I felt. That who the hell is going to read the book? Let's watch a YouTube video, have a popcorn or have a beer. Let's watch a YouTube video, put a microphone, a headset in the head or something like that. But that definitely helps. Books reading, these books reading helped even more actually to me. Initially, I was exactly the person that how the heck somebody can read these boring books, pages and pages. Exactly, it was me. I'm telling you upfront, I'm admitting the sin, and obviously, inside most of you guys, that sin is lingering somewhere. I'm telling you, we are all humans, but I'm telling you, this book reading is going to help you a lot in addition to the YouTube videos or anything, right? So that's a good worth to mention and stress out. And the final smiley face is my torture session for you guys. Hopefully, you got enough tortured, got a good got a good insight. Let me give you a quick. I told you that I will give you a quick demo through, right? I think this is going to be more interesting. You guys are still with me, or almost?
Yeah.
Let us do a time check. So how long
Exactly
do you
9 o'clock.
Maybe another 5 minutes, 10 minutes.
Yeah. This would be the most interesting.
No, I'm
Let
saying
me
we
see.
don't want to run it short, right? So if you want to reserve it for next session, also we can do that.
This is just like a taste kind of thing, right?
Okay.
So yeah. Because this is like everybody. If you don't have Thinkorswim, definitely download it, and you can start using that. Even you can create a dummy account or a paper trading account. So let's pull up a few things here. So let me say parabolic SAR apply. So what you see here, I am at a 5-minute chart. As I said, I'm at a 5-minute chart. From here to here, it's trying to be uptrend, and from here the downtrend started. Even though the downtrend is here, parabolic SAR cannot do much of a help. It did miss a small section here. So what we are doing, we are trying to add more indicators. MACD indicator. Some indicators come at the bottom, some indicators come at the top. They call lower indicators, upper indicators, lower indicators, upper indicators, right? So here, when I combined them, this miss out of the parabolic SAR, the top indicator was covered by the bottom. So what you see here, the turn started right here. So I got aware, and also the color started changing. So probably I might have taken a call right here itself. I did not wait all the way up to here. See, by combining these two, what happened? So that's exactly what you would do as well in the daily life. And the same thing here. Here in this case, it did a crossover. If you see this MACD, it did a crossover, and also this starting to show the bullish action. And then this already is showing that I am in the uptrend. This guy is already saying the uptrend. I told you the dots are at the bottom of the chart. That means that it's the uptrend. This guy crossed over. This guy said green. This guy already said you are in uptrend. So that means that you can take happily a trade here. So what will be the growth? You are looking at a 0.34% jump right away, right? You can wait all the way up to here as well, because if you see the line, what you're seeing, so here it is like a 0.4%, 0.4% gain you're able to get till all the way up to here, right? You can happily, because this did not give an indication. This did not give indication, so you are able to enter here, somewhere here, and you're able to go up to here, 0.4% gain you're able to get right away, right? So you already saw. Let's add more indicators. Stochastic. Stochastic fast is the one that we just saw apply. It is a lower indicator. It just came down. So stochastic. Now I see Venkat why he's told me. It is more powerful. He loves it. If you see here, this crossover happened much early than this crossover. Yeah, exactly. So this guy told me way upfront, right here, exactly where the stuff is going south, exactly where it is. So he gave already indication. So I took help of this buddy called stochastic, and then I saw these colors changing. Okay, it's going down. Then I saw the price action, it's changed, and I also draw my trend channel here. Also do my trend channel here. The trend also cut here. This guy told me, this guy told me, this guy told me. How the heck, man? How many more people need to tell me? I need to do whatever I need to do, right? So that's exactly. So now you became more smarter, and you have, I would say, in this particular scenario, in this exact space, you are 200% sure that, not 100%, but 200% sure that you are making that money. How much money is that? You're talking about 1.12, almost 1.15%, which is a heck lot of money. That's a lot of money. And in how many minutes? In 15 minutes, exactly 15 minutes, right? In 15 minutes, you're able to do that much of a money. So see the value of clubbing the indicators and the support lines that you drew, which we just learned from this session, right? We did learn, and we did see, we did walk through. So these are the things, right? So then what you could add is RSI. Let's try to add RSI. RSA as well. RSA as well is showing that it's a declining. So this is another guy telling me it's a declining thing, right? So here RSI in this area, it's not telling me much. Obviously here also it is telling that it's in the consolidation phase. In this case, RSI is not helping me. However, MACD is helping me to decide. So SAR and MACD is helping me make a decision over here. This area, MACD and SAR are helping me take a decision. Did the stochastic help me? No. Did RSA help me? Probably a little bit, but not that intuitive. But who really helped me? Parabolic SAR and MACD did help me to take a call here. So you can like club multiple indicators like this on a single chart and start taking a educated call of your trades, right? So I just went into the minute chart. So in a minute chart, what you see here is like more accuracy. So here exactly you can like pinpoint exact more accuracy, because minute is like by minute, you can go more accurate. And I told you can like have multiple things. So what I'm going to do is did this cut, right? I just cut the screen to two halves, right? So what I did was I want to see here on the left hand side, I'm seeing the minute by minute. On the right hand side, I'm seeing the 5-minute chart, both at the same time. And if you see, if I'm moving the cursor, the plus and minus, the crossover cursor is trying to like also pinpoint. Do you see that? It's following through, right? So that way I can like pinpoint myself here and see, oh, okay. It is not giving me much of an angle here, if you see, but here it's trying to like give me much of a better angle, because it's a 5-minute and less bars are available. Here, I took a decision right exactly here, kind of a thing. But at the same time, I'm not able to take a decision here, but I was able to take a. By the time if I take an action here, probably I'll be taking an action here. If I take action here, what is happening is because I need to know a couple of bars, right? I'm taking an action here. If I do only on the 5-minute chart, but see, it's already too late. Too late meaning like it's certain amount of. I mean, you are late by that much, right? So what is happening here is you're able to combine multi charts on the same screen, one on the 1 minute, one on the 5 minute. But if you are a long-term trader, what you do is go with a 1 year, 1 day. So you go with a 1 year, 1 day chart. So you're seeing that, hey, is Apple in the uptrend? Kind of, but it's like dicey. Yeah. But if you see here in this case, right, if it starts doing that, it's in a serious downtrend. So those days you won't, because it's in the daily, those days you won't do it. You are in a daily chart. This is a daily chart. This is a minute chart. So you can like club multiple of them, and you can keep going that way, more and more, right? So you can like you can keep doing that. Your intelligence will grow more. Your decision making power grows even more. So this is a 1 minute. This is a 5-minute, and probably this is a 1 hour chart. You probably go with a 1 hour chart. So 1 hour chart. So this is a 1 hour chart. That means that obviously how many hours are there? 9:30 to 4 o'clock. That's all. Those are the hours that we have. Morning 9:30 to 4 o'clock. So if you are in this chart, in this hourly chart, what you're saying, oh, it's this entire hour, if I trade, is going to be anyway downwards. Exactly what happened here. This entire hour was downwards. So you don't want to even try to trade in this hour. So here it started to go up. Okay, there is some money here. That's fine. I'll try to trade. So that's exactly what you're trying to like do. There is some money here. I'll not trade again here. I'll try to like trade here, kind of thing. So you can like take the approach that way by looking at the hour. Hour information is borrowed into 5 minute. 5-minute information is borrowed into one minute, or the vice versa. You are the other way around guy. 1 minute information is borrowed into 5 minute. 5-minute information borrowed into 1 hour. Or keep going this way and this way both. Your eyeball need to go right to left and left to right. And make a decision.
Venkat?
Yeah.
The hour chart, you said, oh, this hour is going up, or this hour is going down. So if it's going up, I will buy it. But that chart is done on a past basis. You don't know the future hour.
You don't know future hour, at least this hour. So that's the reason why this style, perfect. Let me switch this to bar. So now I clear the drawings and click yes. Perfect question and great hunting. I mean fishing question, right? Great question. So this particular hour, this bar. Now I'm in a bar charting style. We said multiple charting styles. That's the reason why I like this bar on a 1 hour bar chart. I switched from the candle pattern to a bar pattern. You see these nooks. So this 1 hour started here, and this bar, this nook initially would be here. It keeps dropping. It keeps dropping. That means that this whole hour it's going in the downtrend. I will not even look at this or this. I'll just look at this saying, hey, this is first of all red. It is going down, and it is keep on going down. So why the heck I even want to trade in this area? I will not. Then the next hour started. Next hour handshake. It started almost at that, and slowly it started to show green. Okay, so that means that this hour is a good hour, right? That means the running guy got tired, or the dropping got tired. Now he wants to run, right? So then that's a time when I'll try to like start to think about getting in.
So you're saying the green bar has started in this hour, so let me get in this hour.
Yeah, exactly. Yep, exactly. So here, if you see, the green started. However, if I try to overlap the green, actually that green is here. This green is, see that line when I drew, it gave me an idea that it is trying to go up, but really is it going up? Probably no. So that means that this price action, probably it started here. The end was like this because it's a old hour. But when it was going, it gave me a green signal. However, my eyeball will come back here and start to look at the price action here. It's still going down. Okay, let me see in 1 minute. It's still going down, man. Forget about it. Okay, this green, probably it's trying to do a little green, but really, if I closely look at it, it's not. Forget about it. Then here, finally it started to show red, but overall, it started here and it ended here. Even though it is showing red here, right? It started here. It started to go up. So if you kind of see here, right? So that's exactly what it is. In the 5-minute chart, what happened here is what that is. So you are trying to take the hourly information, try to overlap with the 5-minute and overlap with the 5-minute, 1 minute, and vice versa, 1 minute to 5 minute to 1 hour. So you are looking right to left and left to right, both ways. You need to take multi. What are you getting out of this multi screen, right? You have to take the help of multi time frame for sure. There is no second around it. You have to take one window will give you nothing. One window will give you nothing, right? It'll give you something, but would it give you the chance of getting a line share? No. Would it give you a chance of getting an ant or a cat share? Yeah, probably yes. You'll be able to make that much kind of a thing because you are not looking from a 10,000 feet as well. You're only looking at a 10 feet, right? So that's exactly what this is. So that's
Venkata, this is very helpful. I was just wondering, with all this analysis, the stochastic and what the dots analysis, would that have helped for the FANG stocks, over the past couple of years?
Yeah, absolutely. Not just every stock, right? Annotation is requesting to annotate the sharing.
But they probably broke all tradition, right? In going up so much.
I didn't get the question actually.
No, the way those FANG stocks have gone up. They probably broke all tradition of fundamental analysis and even the fundamentals.
Yeah,
they
so
broke the
I think,
fundamentals, but they did not break the technicals.
right.
They were running or almost all the stocks today. They are running on technicals. Fundamentals are news coming here, coming there. You got to use that as the oil to the fire. But where is the fire? Fire is in the technical, and the fundamentals. There is no such thing as fundamentals anymore. It's only news and rumors.
Right. Yeah.
There's only news and the rumors left out, right? These days. So news and the rumors are the oil, and technicals is the fire.
I will rephrase the question like this, then you can still say it's technical. The FANG stocks, overall the trend in the last year especially is upward trend. Even though within the upward trend there are some volatility, but the trend is up, 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 up. So you are saying that even though the trend is up, 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 within the volatility you could have used this as what you call support and resistance. That's all you're saying?
Yep.
Okay.
Yeah.
So the technical analysis probably is a lot more short term. That probably gives you indicators on a daily basis, right?
No. It's not a short term. I think because I accepted, I think I just lost my capability of I don't know what it is. Annotation. How do I stop that? Uh, I think I just accepted. Somebody thought I wanted to do some annotation, but my mouse. How do I get back my
I think you
mouse?
can do an escape or go to.
Oh, here there is a. Okay, yeah, I got my mouse back. Yeah. Mm-hmm. Yeah. What is the question you said? Sorry. Yeah, the technicals, right? Technicals. Even if I do a daily, for a second, 180 day 4 hours is my favorite. I said, right? So 180 day 4 hours. If you see, and try to overlap with stochastic fast and apply, and if you kind of see, if I see this, I mean here it's very narrow. It's like in the consolidation. But even then also, if you see, it's after crossing over between here to here, it did go, because it's a daily chart. You are not able to appreciate the graph is so small kind of thing. But from here to here, probably I'll try to like measure how much it is. Probably let's say that's like 2.5%, right? Stochastic is able to give you that. And here, if you see, it started to fall and it's crossed much. And if you kind of like see that, how much it fell, kind of thing, from here to here, from the stochastic to stochastic, if you see, it fell like 8.9%. It fell down. So I'm at a daily, very high level, 4 hour daily kind of a thing, right? Still, I'm able to use that. So technical indicators, you can use it at any level. That's what I was telling.
Okay.
You can use it at any interval, and even if I use it hourly, where is the hourly? Hourly is even better. If I use it at a hourly kind of a thing, you can like see from here the things started to trend upwards. So you're like seeing from, you're looking at 1.2% kind of thing, right? So yeah, you can use
So
it in any
Gopi,
time
maybe
frame.
to answer your question, if you want to look for long term, either do the 180 day 4 hour or the 1 year 1 day.
Yeah, that's what I use, the 184 hours.
Yeah, 184 hours. Is the best actually, I would say. So here, if you see, this is all downtrend kind of thing. I don't want to get into that stock at all. This is like a very high level, right? 1 hour. So I don't want to get into that stock at all. This is like multiple hours. So all these days. So this is all in the uptrend. Everything is in the above line. This is all the uptrend. So overall, it is an uptrend. So anywhere here, some days it will just fluctuate like this, as an example. But if you're a long-term trader, by definition, as an example, and you saw this particular thing, and the red turned to green, if you entered somewhere, any place, somewhere here, kind of a thing, right? So that would have given that 2.5%. That's what it is showing. And this is like what? This is this is a 2.5 days. This is a 2.5 day interval.
So Venkat, how do you overlay any upcoming news that can affect any of the stocks? Let's say there's a investor conference call coming, or the revenues have been released, and all of a sudden some stock shoots up. How do you see the technical impact on your positions using that?
Correct.
How do you overlay the fundamentals or the news coming onto it? And
Take this as an
stay
example,
out
right?
of it or try to get in?
Yeah, take that area as maybe that's too big. Yeah, take that. Let's say we are here. We don't know what is going to happen, right? Or maybe right there. Everything looks good. It's in the uptrend. Everything great. Or maybe even right here. Everything is great. It's an uptrend. Yeah, obviously everything is uptrend. There's a news that came up. news is a news. By looking at the news, we know it's a good or a bad. Then you are trying to see, not every good news is bringing the stock up, not every bad news. Sometimes the earnings, they suck, but still the stock goes up. Sometimes lately in the last 2 weeks, blasting earnings are coming, but stocks are dinging. Blasting earnings, very good earnings are coming up, but stocks are dinging because of the negative sentiment that got into the market. That's a real reality, right? So right now here. So you see that stock is having a great earning. It might go up, awesome, kind of thing. That's what you expect. So you don't know what will happen in the future. So the next 5 minutes happened. You started to see, oh, what is happening here? Oh, what is happening here? Oh, okay, what is happening? That should shoot up. What is happening here? Exactly. So your news was there. You digested the news. You're expecting a direction, but technical analysis is the only truth that it is going to show you. So it is trying to take a dip, and it's showing right here. Okay, let me get out, man. That doesn't make sense anymore. Even though the earnings numbers are good, these guys, these analyst idiots, they will come with something. Oh, it was good, but not at the mark, and as not as expected. It was a little higher. Earnings per share is little higher, but not as that much. But the futures, the prediction, the forecast is not good. The whatever, blah blah blah. What nonsense! They come with the after fact kind of thing after the stock is dinged, right? But all that play is already pre-prepared by the money makers. They decide upfront that it does not matter. Apple makes a good earnings or not. I will ding it. That's exactly what happened right now. Apple. Take an example of Apple. The earnings were awesome. The stock got dinged. Not that day, not the next day, not the following day. 3, 4, 5, 6 days it got dinged. They made the money maker. That means that the big fish already decided that that's the direction they want to take it. So what are you going to do with that? Yeah, exactly. You will use your technical indicators. These are your friend. You will see this. Okay, let me get out, man. I burnt one finger. That's great. I still have my hand. Let me save my hand. One finger is burnt. Great. Let me get out. That's what happened. So that's the way you use your news. News will not get into this chart. You will use the news to make your common sense decision by looking at the tech indications.
Okay. All right, great. Thank you so much.
Yep.
Very nice, interesting presentation.
Amazing presentation and training, Venkat. Really, really very good.
Venkat, it's an amazing presentation. I really loved it. Thank you very much.
Yeah.
No worries. Yeah, hopefully you'll be able to fish some dollars out from the market.
Yeah, I need to learn a little bit more from all this. Hey, but Nari, I hope you have a tape of this.
Yes, I have.